Hey guys, welcome to Pippin and Dippin Academy's YouTube channel. I'm Joe Von Grixon, and I'm here with Hunter, the Pip Hunter Burkett. How are you guys today? Hunter, you want to say hello?
What is going on, guys? What is going on?
We're a little late with getting this out, but that's my fault, not Hunter's. He's been ready to rock. I've had some timing issues, so at any rate, we're getting it done for you. Today we have something really awesome, but before we do that, if you're new to the channel, make sure you hit the subscribe button on the video. It should be somewhere in there. And if you like the content, pound that like button, please. It helps us out with our YouTube algorithm so we can help more traders just like yourself. But it's also important that you write "I subscribe" in the comment section. If you have any questions, if you'd like to see a video that we haven't done or you haven't seen yet, go ahead and ask for it in the comments as well. Other than that, guys, we appreciate you stopping by. Today we have something really, really awesome. Hunter and I have been playing around with it a little bit more. It's part of our trading strategy anyways. We've just been playing around, scalping a little bit more with it, having some fun, just testing it out, and we're going to share it with you guys. So without further ado, I'm going to go ahead and hand it over to Hunter and let him share his screen with you. Hunter, you ready, brother?
Yo, what's going on? Just wanted, before we start, guys, Joe and I want to reach more people, and I know for a fact that we got a lot of value on this channel and stuff like that. So you guys hit, just like I'm piggyback on what Joe said, like and subscribe on the channel. Go and check out our Instagram. Go and check out our Facebook. We got some go lives that we did on our Facebook. Go check those out. If you guys are still on the fence of starting your 2022, then go watch our Facebook and hear what we have to say about mindset and stuff like that, guys, because that's the first start of it. That's A, and then getting to B, and then getting to C. But if you don't have your mindset, man, you're not going to go nowhere. You're just going to literally spin your wheels. So I'll go ahead and start. And guys, we're going to be talking about the TDI. You guys are been blowing up our TDI MACD video, which we love the MACD. Don't get us wrong. We love it. But the TDI, if it's used correctly, it can show you some things that the MACD can't. Okay. The MACD is phenomenal when it comes to reading divergence, and the signals are really good when it comes to finding your trade setup. But the TDI is just, it's where it's at, right? So I'm going to start by sharing my screen and getting you guys rocking. But before I start fully getting into this, I want you guys to understand, if you haven't been through any of our other videos, go and watch those, okay? And then come back to this one after you watch it and watch it again. The reason why I say that is because, guys, you got to know your directional bias. You got to know market maker. You got to know where you're at all times, or this will result in losses. Okay, just because it's a high probability set doesn't mean you can't still lose, right? If you don't know where you're at, because there's places and areas, guys, where you're going to see this and it's nothing but a trap, and you're going to get caught, right? So figure out where you are in the market, figure out where liquidity is at, see where the money is at, and then take a trade based off that. Because if you know where you're at, pattern, timing, cycle, guys, pattern, timing, cycle. What are those three things to you, right? And then you'll figure out where you need to take your entry, okay? If you know the trend, then you know where to find your entry at, right? So I'll start back here. I can see a bunch of them, okay? And I'll start by let's start right here. I'm going to start right here on this Wednesday, okay? I want you to pay attention to these. I'm going to box these up, okay? All these trades that more than likely Pippin and Dippin took, okay? The Pippin and Dippin family. Some of them we did not, due to the fact that it wasn't in our timing, okay? But these are very, very high probability sets, okay? And there's a lot. I see some more. I'm marking up high probability, okay? And some of them, guys, are not in our session, Okay, so like this one here, I would have never took. Just so you know. Here's the one that I'd have never took, but it's there. Okay, here's another one. If you'd have been trading in London, you'd have got it. So yeah, that's enough. So I'll go back. Now I want you to pay attention, guys. I want you to pay attention to this and read the TDI. Okay. Now, when you get a shark fin on the 15-minute time frame, okay. Now, and you know your directional bias. Let's just say that this. Let me go to the hour and see where this is at, because I can pinpoint this. Okay, so this was the peak formation high. Okay, they come up here and hit that high again right here, and then we started to drop down. Now, as you can see, the ones that pull back and give you the trade are the more high probability. Why? Because you're trading with the trend. Okay, you're trading, it's making lower highs. You're starting to get under your EMAs, your big moving averages, and under the 200, under the 50, you're good. You know your directional bias, right? So then it's time to identify. Okay, so we'll identify on this trade here. So the first one is a shark fin. I can see that. Now let's go to the 12th of January, and I want you to see this trade. Okay, and it was what? An M pattern. You guys always hear me and Joe talk about M's and W's. Okay, now remember what I said at the beginning of the video. Don't come back at us and say, oh, Joe and Hunter, this shit's not working. You have to do your due diligence and understand where you're at in the cycle, where you're at in your trend. You find the trend, you can find your entry. Okay. Now, these are a lot better when you're over extreme areas, right? Overbought, oversold, like that. It just gives you, it's not like it's the all be all. It's a better confluence, right? So as you can see, you have an M pattern here, and you have what? You have out of the band. So that's the left leg coming out of the band, and the right leg coming back and forming on inside the band. Okay, out of the band, into the band. Shark out of the water, back in the water. If that's the term that's you guys heard, there's two terms: shark out of the water, back in the water, out of the band, into the band. Okay, and what else do you have? You have divergence on this trade. Okay, you can see that it came up and got a third leg, guys. If it hit that high 3 times, game over. Take the trade. Do not hesitate. Do not hesitate. Do you see that this right here overall is a W inside of an M pattern? Okay, this is a high probability set. So get your entry, close below the 13 EMA, get your pullback entries, and boom, look what type of result it gave you. Okay, shark out of the water, back in the water. Okay, we move down. Look at here, shark left leg, shark out of the water. Okay, if it's touching it, it's okay. Okay, shark out of the water, back in the water. What do you have? Divergence with what? The trend. You're making lower highs, right? Your trend movement is down. Okay, boom. Let's get to another one. I'm still in the 5-minute, right? Look at this. Out of the band, here's the left leg. We start to move over. You could have been in entry in here as long as you got past this liquidity spike, which it was taking out stop losses. Once you set your stop loss past that, you're fine. It never hit you. It went your favor. Okay. Where are you targeting? If you haven't watched our double zeros and 50s, guys, go and watch it. And I'll put it right here. Boom. 155 what? I mean, 156 what? Double zero. Why? Look where it's at. Look where 156 double zero is at. Past the liquidity. Right here. You knew that there were stop losses resting right here due to the fact that people buying right here. And then boom, smoked it. Right? Where was your next one? Right? 155.50. Look where that's at. There's your next take profit. Look at that. Precise, right? Beautiful trade. Out of the band, into the band. You got your left leg here. You start to move up. Once you've seen this liquidity spike, it'd been game over for me. Entry, above the liquidity spike, never came back, got another leg, would have gave you even more confidence as it was broke down to take the trade, right? Okay, and then we move on. There's another one. Go back to the 15 because this was a 15-minute pattern. Look at this. Out of the band, into the band. Perfect trade. Boom. Gave you the entry. This was during Asian. Left leg was in Asian. Gave you the entry. You got a 20 pip stop loss. Boom. Same concept, guys. Where was your take profit? Look, 156.0, 00. It smoked it. Look where it rested at. 155.50. Boom. Looky here. Here's another one. This is a 5-minute. Out of the band, into the band. Right? This is a little counter. Probably would have been a little bit more riskier because you didn't, you know, your directional bias was down. Okay. Looky here. Out of the band, into the band. Left leg is out of the band, right leg is into the band. You can see that. Right? Boom. There's your entry. There she goes. Same thing here. Left leg out of the band, right leg in the band. Boom. Entry. Stop loss, 20 pips. There you go. Let's go to the 5-minute right here on Thursday. I'm fixing to show you something else, guys, that's going to blow your mind. There's that trade. There's that trade right here. Almost a solid one. I'm pretty sure I would have took. That was beautiful. That's beautiful. That's a beautiful counter. That's a beautiful counter. Right here, guys. Out of the band, left leg comes back up, retests that high. The second leg is inside the band. Boom. There you go. Performance. Go back to the 15. This is a 15-minute. Out of the band, into the band. Entry, stop loss, reap the benefits. Okay. And you can see, guys, sometimes you will get out of the band, in the band. You get a little bit of profit, and it takes you, right? That's the reason why I got to stress this enough. You have to understand. You got to go back and watch our other videos or join our academy. We'll help you understand market maker cycle, the pattern, the timing, order blocks, where liquidity is at, and then all this will be connect the dots for you, and it'll be all in place where you need it, and you'll know exactly. Okay, I don't need to take this right here, right? Because due to the fact of where is the liquidity actually at? Does it need to go on higher time frames? Is what I mean. Does it need to go down further? Let's check that out. 24th of January, hour time frame. Right here. Okay. 4-hour time frame. Look at that, guys. You have for one, you got your 800 moving average coming through there, and you also have an order block here. Okay. Order block here at this level here. So if we go to the daily time frame, you can see there was a little hiccup right here. So if you drawed a marking right here on this last bearish candle before a big move, look how it come and respected it perfectly. Boom, ping off and left. That's the 24th of January. So you have to understand liquidity. Does it have enough more room? When you were looking at the trade might have been up here and still had room to go down and grab that liquidity off of this, or go to this order block. Okay. The reason why is because it left really fast, guys. Left really fast, and it hasn't been back to it, and now it has. Okay. That was a perfect reaction. That's what you want to see. Okay. Go back to 15. Okay. You can see this one right here that I got drawn up. Out of the band, left leg. This is an Asian. Okay. Right leg inside the band. Perfect. Divergence, everything that you want on the trade. There's the entry. Boom. Okay. And guys, you can use the double zeros and 50s for your target, or you could just target liquidity. Okay. Where, let's just say this is a banger trade, right? Let's just say you took this W pattern. Okay. This is something that I would take it because I'm trading New York session, right? So where would I have taken my take profit. So if I got in this trade and got my pullback entry, right, I would target this area and I would target this area because I know there's money here. And did it hit it? It hit it perfectly. Hit it perfectly. Both of them, right? So you have to pay attention to that. And that gives you confidence, guys. That gives you confidence, especially with the double zeros and 50s. You know what to expect. You know where it's going to head. And now you can manage your trade.
Hey, Hunter.
You don't have to. Go ahead.
Hey, I'm sorry to interrupt you. I just want to, if you can just stay right where you're at, but just that left, that second take profit area, if you will, where the liquidity is at. Can you explain to them why there's liquidity there?
Yeah. So right here, guys, what you talking about, here or here?
The top one there.
Okay, cool. So once you've seen this, guys, once you've seen this movement down, okay, and I'll go to the hour time frame and I'll explain it a lot better. Okay, I'll zoom in on it right there, and you can see that this right here is potentially an order block too as well. Guys, do you see how fast price moved away from this area? Okay, so when you got institutional big players in the market, and when price moves that out of the way so fast, guys, they when it comes to coming back to that area, they need to come back to that area too, because sometimes that price moves so quickly out of that area that they get in drawdown as well. They don't have the time to get out as like anybody else, right? Sometimes like we do. We don't get time. If you ain't got a stop loss set, then you're busted, right? So there was an order block setting here, okay, and we come down, we grab liquidity at the area of the higher time frame that I showed you. We set the pattern, and we start to move up, right? So where was our target, right? Our target was here because liquidity's been there before. You knew that there were stop losses resting here. There was also stop losses resting here, right? And also this was a trade set of people sending the market back down. Market makers sending the market back down, right? So anybody that was right, you got to think about, there were stop losses here. There was also buy stops right here. When people look how price hit it perfectly and snapped it away really quickly, right? Because there was buy stops in there, and they don't want them to have it. So if price broke this area and then it snapped it really quickly out of there, why would you just keep going with the market? You're letting these guys win, right? That's not what the market maker is designed to do. They want to make money. They don't want you to make money, right? So that's the pretty much the definition of why liquidity is there. There's a whole there's a whole bunch of variables, a whole bunch of moving parts when it comes to how much money's sitting in this area, right? Yeah. There's stop loss orders there's buy stops, so they can activate it and then take it away from them and stuff like that. So if market makers, institutional, big time players are targeting these areas, right, to take their money, then why not target the same area, right? So that's why I do that.
No, that was perfect. The faster it moves away from the area, that's what I wanted you to share with them, because
yeah,
when you see the market move away quickly from an area of value, like where you see a pattern or something like that, I know that's what I look for personally, and I know that's what we always talk about. I just wanted to make sure that people understand that the faster it moves away from an area, that means there's lots of liquidity there, and the market's going to have to return there exactly. Eventually. Yeah, that's the simplicity of it. Thank you for that.
Yeah. So but yeah, guys, and that's why we target those areas, and also too, those double zeros and 50s guys are institutional levels as well. That's why we target them as well, right? Here's another out of the band, into the band. Look at that beautiful that multi-session W pattern is. Boom. And look where it stopped at. I want you to understand. I want you to understand that they set an Asian high. Okay, this is the Asian high. They smoked it. I want you to pay it, and they left it. Smoked it, left it. Breakout traders lost, right? People that got buy stops immediately went into drawdown. Immediately, right? So what I'm saying is this is a perfect area to take your profit. Look where, look at that. There's that's 1 pip. But look, if you would have either way, you would have your stock take profit above this area, just slightly above it, or targeted 154.50. It had been hit, and there's your take profit. Guys, do this, and all the second guessing of where I should put my take profit is out of the window. Then, guys, when you're entering this trade and it gets past here, like you, however you have it, I know when I get a 1-to-1 out of my trade, I break even immediately, and then you know how to manage it from there, right? You know, you'll be solid at it, right? So I wanted you to show you that too, guys. And look, I want to break down to the 5, and I won't even break down to the 1 minute time frame, guys, because it gets crazy. This might be a more of a longer video, which is fine. But let's go back to the 5. And I want you to pay attention to, guys, when you know your direction, this is powerful. When you know your direction in the market, okay, and this is say your direction's up, let's say on Thursday, and you get a 5-minute shark fin, you need to go down to the lower time frame. This is the same thing that we taught on our scalping strategy. Go back and watch that video. 15-minute shark fins in the direction where you know your directional bias. If you get and typically that's a pullback. And if you get when you get the pullback and it's a shark fin, you can go down to the 5-minute, and typically it's going to be another W or M pattern. And there's your scalp. High probability, and you're trading with the trend. Okay. So you just had this awesome out of the band, in the band on the 15 rise, pullback, shark fin on the 5-minute, go to the 1 minute, and look what it is on Thursday. Okay. Look at that. There she is. What is it? Out of the band, into the band. Trade. See ya. See ya. Look where that 154.51 is. Tell me that I can go down 1 pip. And it pinged it. It pinged it, guys. Pinged it. You could have targeted there. Or when I'm scalping, guys, especially, and I do this only on GJ and gold. I do this only on GJ and gold because I know that I'm gonna get my pips out of it, right? So boom, you could target your stop loss is really small. Just say 8 pip stop loss for 16. There's a 2-to-1, right? If you would have went there, the risk to reward been even better, right? Where would you have? You're like, Hunter, I want to target money. Okay, money. All money's right here. Okay, you could have targeted that area and been fine, right? And been fine. And there's a solid set, guys. It's a 1 minute time frame. You're not looking for a holy grail in this trade on the 1 minute time frame. Okay, and then look, price comes and your directional bias is still up, guys. You see the blueberry on the 1 minute time frame is the 50 moving average on the 15-minute. Okay, so your price comes up, comes back to the 50, and gives you what? Out of the band, in the band. Boom, trade, boom. You might have got stopped out right here, but I love to see a W pattern. I don't like to see out of the band a sharp move and then trying to get into the trade. I want to see a nice looking W pattern, kind of like this, and then boom, give me my entry, pull back, boom. Look where it went, guys. Look where it went. It busted liquidity zone, and it went right back to 154.50. Okay, this is scalps all day long. Look at this beautiful trade. Right, market shifted on us. Here's another one. Out of the band, not really a really good set. I like to trade, but it'll work. So you find your direction, guys. You find your trade. Look at this one. Your direction's up. You're above your EMAs. Your direction's up on the higher time frame, right? You know that. GJ's moving up out of the band, in the band, second leg. Even if you had your stop loss past here, you're good, right? Set your stop loss past the low a little bit so you can have a little buffer, because they will come back and hit you and then go, right? And do not hesitate. If the trade is valid, do not hesitate to get back in. Look, you had a 5 pip stop loss in here. Easy for 10, 2-1. Easy money. That was an Asian, which I don't trade in Asian. Look at this beautiful set, right? If I went to the higher time frame, guys, this is a counter because our direction is up, right? We know that. There's money resting here. They busted the Asian high, took out liquidity, and they ran. Look at the out of the band, in the band, trade set. Boom. 6 pip, 7 pip stop loss. Look at the gain on it, right? It's perfect. Out of the band, into the band, trade setup, right back up, right? Now, remember, I want you guys to pay attention to understanding and doing your due diligence on your market structure, where you're at in the cycle, where you're at in the trend, because all that plays a big factor in this. Guys, you can come in here and you can see him in W patterns all day long and get stomped in the market. That's the reason why I say do your due diligence, see where you're at, so we can mark these up, right? Are these the reason why I say I would have took this counter right here? Because, guys, something that moves that dramatic is typically a shark fin. I'll go to the 5 minute. It wasn't on that one, but look at the trade. Look at the trade on the 15-minute time frame. Touches the band, out of the band, into the band. Trade setup. Okay. I know it's not with the trend. I know it's a counter. It's a little bit more riskier trade. Okay. I'm just showing you these for example purposes because they're good trades. But if you were trading and you wanted to be disciplined, trade only in the direction of the trend, which would have been your good trade. Typically that one would have been a good trade on the lower time frame. Let's see the 5 minute real quick. I know that this one, that's why it performed. You've seen that one that performed right here, performed. And also right there, look, 5 minute shark fin, 1 minute W pattern. It performed, grabbed liquidity and left, right? When the market started to shift like that, then you know for a fact. And two, guys, it set up an M pattern. It set up an M pattern on the 50, right? That was a beautiful M pattern. Tap 1, tap 2, tap 3, tap 4, 4 times of the Asian high, and it left. Okay, never trade back to that. Never trade back to that. But as far as all these other ones, guys, you're trading with the trend with, or even countering with a 5 minute shark fin, going to the 1 minute, or a 15-minute shark fin, going to the 5 minute. They're all really good sets. They're all really good sets. They're all really good sets. But you have to, and this takes practice, guys. Don't be saying, "Oh, Hunter said this is high probability. I'm gonna go start trading on a live account." Go demo trade this, and I promise you, now you're gonna be taking a lot more trades than you. If you guys are loving the not over trading and stuff like that, you'll be taking more trades than you want. But you also can take more trades, but you can also manage this and be disciplined and say, I'm only going to take high probability sets when it comes to scalping. Right? So I'll go to gold and I'll show you gold. Gold is just phenomenal when it comes to this. Okay. I want you to pay attention. This is 15 minutes. I want you to pay attention to all this from Wednesday all the way down, 3 days of it. Okay. There's one right here. 5 minute shark fin right there. Okay. $5 minute shark fin right here. I'm just marking them up. And that's with the direction of the trend. 5-minute shark fin right here. I'm just going with the trend. Screw it. I'm not even going to mark the ones up. It's not. 5-minute shark fin. 5-minute out of the band, into the band. Right there. Out of the band, in the band. And we had a peak formation high set up on Tuesday. Right? And that was a really good set. So let's just look at these. I just want to look at these. This is 2, 4, 5 possible trades in 3 days. Just 3 days, one pair. And then, like I told you guys, just trade GJ and gold. And you're talking 3 days of trades. There it is, right there. There's that out of the band, in the band. There's the entry, 21 pip. Look at the reward. Okay. Here's the other one right here, out of the band, or this is not out of the band, but it is close. But it is a W pattern. Look at it. Boom, boom, entry. Comes back and gives you another entry that you could have stabbed if your stop loss was right, and then boom, look at you reap the benefits from it. Okay.
Which, hey, go back to that real fast, Hunter. Just, I want to reiterate what he just said, guys. I don't know if you caught that because you're watching him out of the bands, in the bands, but see how it pulled back? It made that M pattern that Hunter showed you, and then it pulled back for you, and he said, get another entry. Guys, that's where you stack your entry.
Exactly.
Stack your entry right there. So like when you hear people talking about stacking, that's a great way to stack an entry right there. And man, it's depending on where you get it, it's even, possibly a discounted entry. So I just wanted to reiterate that because you said it, but I want to make sure that you guys realize that's a great place to stack trades.
Yeah, it's a really good place. Look, out of the band, into the band. This high probability, boom. You had a 10 pip stop loss on gold, guys. Look, you could have targeted liquidity. And the same thing as far as gold. You could have targeted liquidity, or you could have targeted what? 1810 00. 1810 00. And look where it's at.
Mm-hmm.
And then boom, right? That's an 80 pip move. Here's another trade that you could have taken in the direction of the trend. Boom. It just wasn't a 5-minute shark fin. Here's another one, out of the band, into the band, half, kind of like a half Batman, if you want to call that, whatever. I don't really like those patterns. You could have just set it above here. Boom, gone, out of there. Out of there. And there's your trades. Okay. Going with the direction of the trend, guys. Like when you see these backs to the major EMAs, because remember, the pullback to this blueberry is the 15-minute 50 moving average, right? So like this little M pattern, here's that other one I was telling you about. Really small out of the band, in the band, but it gave you the trade. You set your stop loss, and boom, you reap the benefits from it, right? And look where you stopped at. Look where you could have put your take profit. 1785 double, or 1785.00, which is 50. Right?
Yeah.
Boom, took it. And then here was another good trade. This has been a little bit more advanced, but here's another one. Out of the band, into the band right here. Here's the trade. Across the market baseline, boom. Right? You got it. You guys have got it. And guys, you can counter. I'm not going to lie. I took this trade here with this little inverted head and shoulders. I got my, once it closed above, I got my discounted entries, and boom, I took it. And where do you think I put the take profit? Above the liquidity, right? The reason why I took it, guys, is because I'm on the higher time frame and I've seen where this trade is trying to rest at. Okay. The reason why I'm like, okay, we need a pullback. If we're going to continue, that's fine. I don't care. I got an order block drawn here, but we need a pullback. The reason why I know that is because typically when they go ahead and grab liquidity from a previous low, typically they'll have a pullback, right? To fake traders to the upside and then drop it to go to where the real money's at. Okay. So I seen that, and I could capitalize on it. Plus, you can see on the hour time frame where it was wicking really good. Correct. Okay. So when this kind of come down, it grabbed liquidity off this low, boom, and then went right back up. Boom, done it again, went right back up. So inside of there, I caught that entry today off of gold. Okay. So guys, I hope you got value out of that. I know that was a lot. It's a lot to take in. Rewatch the video. Go do back testing on it. It works. Okay. But I'm going to say this again. I'm going to keep beating on the drum. Make sure you know where you're at. And it comes a whole lot easier. The trades, and guys, and you have to be like that way in trading. You have to put rules in place. You have to be disciplined with it. So if you're under, this to say, make the rule of scalping of being above your moving averages or below. If you're above your moving averages, you're only looking for buys when it comes to these scalps. If you're below them, you're only looking for sells for these scalps. Okay. And they'll work. I'm telling you, they'll work and they'll perform. You'll be like, damn, heck yeah. I'm just knocking down these 2-to-1s, baby. You know what I mean? So hope you guys got value. Don't forget to like and subscribe. Go check out our Instagram. And if you want a video, a reference, just message us and drop a comment on one of these videos, and I'll reach back out to you. If you want me to shoot another one and get even more detailed in what I'm just talking about, and you didn't hardly get it, then we'll shoot another one in the future. If not, join the academy, and you'll get one-on-one mentorship with us, guys.
Yeah, that was awesome, Hunter. So guys, that was a TDI training, but we gave you so many nuggets. We talked about risk reward in there. We talked about liquidity zones. We talked about how to stack trades in there. We talked about all kinds of different things. We talked about the pairs that we trade when we're using this particular strategy that coincides with market maker. But the biggest thing is, guys, I'm going to add in at the end of the video, there'll be a video there to click on how to identify peak formations, because that'll help you identify the trends, where the market's going based on peak formations. So you'll know how to trade accordingly. Because again, like Hunter said, you want to trade properly. You don't want to, over leverage, over risk, or do something stupid. So go and watch that. There's a lot of other videos on our channel to watch. But with that, guys, like Hunter said, join Pippin and Dippin Academy if you're really ready to take your trading to the next level. Get on these live trainings and trading calls that we do pretty much daily. The training is twice a week, and it is literally pennies on the dollar for less than what you pay for Starbucks a day. For a month is what it would cost you to be a part of our group. So with that, guys, thanks for stopping by. Again, pound that like button and make sure you subscribe, and we will talk to you soon. See you on the next video. Until then, guys, take care. Have a great weekend.
Peace.
See you.
Peace, guys.